Right, good afternoon now, folks, as we head into US trade on Thursday the 12th of October, post CPI. We've had a bit of action after a slightly higher than anticipated print across a couple of the figures, but we'll have a look at that once we get around to the calendar. Really, all we're paying attention to is CPI. You can see Wall Street set for subdued open after inflation data. Pretty negative reaction to it, plus an attempt at a bit of downside, certainly in the first couple of minutes of the US session. But we'll jump over to some charts now in a minute. But ultimately, we've got nothing else really to speak about in markets as we are in US trade for the day. You can see stocks, these figures are a little bit delayed, so we'll jump on to or some of these figures are a little bit delayed, but US dollar up to the minute, you can see dollar strength across the board, and you can see yields relatively strong across the board, which we'll have a look at now when we get to it in a minute. But shorter end of the curve gaining a little bit more than the longer end of the curve, as you can see. But apart from that, forget about the rest of FX. That is relatively unchanged since before the CPI print itself. We'll get across to this where you can see the calendar. You can see the headline figure 3.7, so a slight uptick, or say a slight uptick in line with the previous month, but a slight uptick on consensus. You can see the month over month figure 0.4 versus a consensus of 0.3, so slightly higher than anticipated in terms of the headline figures. In terms of the core figures, bang in line with expectation, so not a lot to see there. But the reaction to it, you can see US dollar upside, so your Aussie, Kiwi, Euro and Sterling. Oops, I did not mean to do that. Your Aussie, Kiwi, Euro and Sterling continue to push lower post CPI. You can see dollar Swiss, dollar CAD, dollar yen all pushing higher. Obviously the dollar index then follows with it. You can see stock indexes across the board, the S&P, the Dow Jones, the Nasdaq, the Russell. The Dow Jones and the Russell, big downside, massive downside in the Russell at the open. The Nasdaq not really doing too much post release. Nasdaq seemingly wanted to push higher, which I think is interesting, but look at that on the Russell, getting absolutely smoked at the moment. Yields higher, the 10-year and the 2-year, but the 2-year rallying hard post CPI, now back above 5%, nearly hitting up 5.1%, but see the short end of the curve rallying further than the longer end, which does suggest that the Fed may potentially have more work to do in order to get this under control. Bond markets, bond traders are kind of the most sophisticated traders in financial markets. The bond markets are telling you something it is probably worth listening to, and the shorter end of the curve steepening faster than the longer end of the curve shows you the short-term interest rates may have a little bit more to do, and that is proving negative across the board for equities. You can see equities lower across the board and US dollar higher across the board. So that is the expected reaction, with the short end of the curve rallying harder than the long end of the curve, and that is where we are at in the US session at the moment. Gold having a bit of downside as well, kind of expecting a bit of a pop back higher on gold, a decent level, the level to get long at. I don't know if this changes really too much. Slightly higher than anticipated, but markets still not pricing in another interest rate cut, another interest rate hike, should I say. But the interest rate cut, or the first interest rate cut of next year, is being priced out. So, is this a sustainable move lower? I'm not really too sure. Markets were clearly positioned, or heading into it, you'd have to imagine they were positioned for a lower print. That's not exactly what we got, slightly higher than anticipated, which is why markets, or certainly equity markets, are selling off, and the dollar is bid post CPI. Is this a long lasting move? Does this continue to go? The longer term trend in the dollar is up, albeit the shorter term trend was down, as you can see, over the last 7 days, but ultimately that longer term trend is still intact. Does that start to push back higher again and start reach back towards the highs? Obviously remains to be seen, but what do we do with this going forward? Maybe a slight, you don't want to go buying these things at the highs or selling these things at the lows. Maybe a little bit of a difficult trade now, unless you caught the initial move itself. It's a tricky one. CPI has sparked some movement, but is it a big enough beat on consensus in order for this to be a long lasting move? I'm not so sure yet. It doesn't fully convince me as we speak, or as I speak at the moment, but we'll keep an eye on it as we go through US trade today. Maybe a slightly difficult US session today, but let's see how it pans out. Maybe tomorrow might bring some better trading opportunities.